My name is Amalia Fifi Alfidra. I want to explain about tax planning through reassessment of fixed asset. With regard to tax issues, considerations that must be considered are the conditions of the company concerned, such as the condition of the company in a state of profit or loss. Second is if loss, when does the loss occur? And the last is how will the revelation impact the tax burden in the coming year? Revaluation according to PSAK. Revaluation of fixed asset according to the provision of PSAK 16 revision 2007. Revaluation is one of the methods of valuation of fixed asset. Companies can choose a cost model or revaluation model as the basis for assessing asset once owned. Revelations are not recognized in the current year's earnings and loss statements, but are a component in comprehensive income, which is part of equity. This role is consistent with the rules in the IAS. Revelation should be done with regular regularity so that the carrying value of the asset doesn't differ significantly from its fair value. Based on the concept of fair value, active market prices are ideal fair value and have high credibility as they are easy to verify. Revaluation according to tax law. The legal basis for asset revaluation has been included by the government in Law Number 36 of 2008 concerning the Fourth Amendment to Law Number 7 of 1983 concerning income tax. In Article 19, Paragraph Law 36 2008, it is written, the Minister of Finance has the authority to stipulate regulations regarding asset revaluation and adjustment factors in the event of a discrepancy between the elements of cost and income due to price developments. Regarding the difference in asset revaluation as referred to in paragraph, a separate tax rate shall be applied in a regulation of the Minister of Finance as long as it doesn't exceed the highest tax rate. In addition to the law, the government also makes regulations to own asset revaluation in more detail in the Minister of Finance Regulation or PMK number 191 PMK number 10 2015 concerning revaluation of fixed asset for tax purpose of application filed in 2015 and 2016, the regulation explained that the Directorate General of Tax or DGT will provide a reduction in the Article 19 income tax or PPH rate for corporate or corporate taxpayer that carry out asset revaluation. Explaining through revaluation of fixed asset. Regulation of the Minister of Finance number 79 PMK 3 2008 that May 23 2008 concerning reassessment of fixed asset of companies for taxation purpose. Although the tax provision allow taxpayer to reassess fixed asset, not all taxpayer can reassess them. Based on regulation of the Minister of Finance number 79 PMK 3 2008, the date May 23, Article 3, Paragraph 1, the reassessment of the company's fixed assets shall be conducted against A. all tangible fixed assets, including land that has the status of property or building right. B. All tangible fixed assets excluding land located in Indonesia, owned and used to obtain, collect, and maintain income that is a tax object. Data collection method. The data collection method is done with documentation. Documentation is the collection of data in the form of documents that are evidence of an event or event. Data collected through documentation are the cost of acquiring fixed assets owned by the company, the list of depreciation of fixed assets before and after the evaluation, the method of fiscal depreciation used by the company, and other data that also relates to the policy of revaluation of fixed assets by the company with the guidance of research instruments. Data analysis method. Technically, the process of data analysis is as follows. The first is collect data relating to the company's fixed asset. Example, the time and the price of acquisition of fixed asset, the list of depreciation before and after the revaluation, and the company's fiscal depreciation method. And the second is see the amount of cost that can be deducted by revaluation and if not revaluation. And the third is see the amount of fiscal losses that can be compensated by more differences due to revaluation, if any. And the fourth is compare the amount of tax payable when revaluation and if not revaluation. The fifth is calculate the tax savings generated as a result of the revaluation policy. And the sixth is the last step taken in the data analysis is to calculate the percentage difference between before and after the revaluation to be able to know the significance of this resulting tax savings.